Did they break trend? And if a bounce comes this week for the S&P and the Nasdaq, can it be the first bull trap potential in more than a year? There is an honorable mention, you're looking at crypto, because it just had a 20% recession dip. That's in 4 days, and then recovered all of it in just a few hours based on really silly headlines, but worth mentioning. In fact, they bounced almost to the penny at the arrows 3 scenarios we had for the breakdown. Don't let that influence how you trade stocks, even though I've at times said it's a good gauge of risk appetite. The summary plan: I am short and winning because we have had red days, but I did book a lot. Therefore, my next part of the plan is to look for rallies in order to reload, reset some of those bearish positions that have played out for the most part. So what I would be looking for the first part of the week is follow through from what happened on Friday. So what did happen last week? Why the disappointment? Well, to put it plainly, NVIDIA earnings report failed to impress in spite of it being a monster report. As a result, it took a bunch of stocks with it and the markets could not stop. We already mentioned this miracle Friday late day rally, and just to give you an idea how crazy it was, here's the visual on NVIDIA, for example. From low to high in 1 day was 8%, mind you, on no special news. Here is the XLF low to high, more than 2% rally in the day. What's more boring than banks? The XLP, Coca-Cola, soap companies. Look at what they did on Friday. Follow through is what I'm looking at for the first part of this week. My assessment of the mindset, this is the opinion part. The bulls are still a bit too bullish. It's like they're expecting a 10% easy rally. The bears, on the other hand, need to force themselves to stay humble because we don't yet have the evidence that anything has been handed to them as an advantage. Just look at the long-term trend. This week's catalysts are probably the jobs data, ADP on Wednesday. Friday's NFP, the non-farm payroll from the government, is a little bit more important. A bunch of Fed heads speaking. They're scattered throughout the week. Don't care what they say. Let's check on the levels. We are now looking at the S&P on a shorter time frame for clarity, and I'm about to mess it up for you to make a point. Here are my marks. Boom. So let's put some numbers to it. 600 SPY is a nice round number, and it's also a sharp failing point from 226. So that is the first test for the bulls. 604 to 607 region is the next test after that. But if we lose the 583 low from Friday, that would indeed open the door for a target that is between 570 and 558. You see the purple box and the orange box and the blue box and all the other boxes? That's prior battle zones. That's the CPI, PPI, jobs number, and a bunch of other things. We just rallied miraculously on Friday just to get back under those. So it's going to take even more hard work to get back to the middle of those, let alone beat them. All this before they actually lose the low from Friday. You can see how the QQQ also resembles the SPY. Short-term descending channels. The bounces are being sold. We have actually fell below the 1220 lows, which the S&P did not, and now they're struggling to get back above it. The QQQ also has a mile to traverse before they hit the PPI, CPI, and the jobs numbers, which are at 522, way above current price. So the bulls need to clear 520 just to get back to the battle from the CPI, PPI, and the jobs number. They need to also do this before they lose 497, which was the low from Friday, because if they do that, then they open the door to another 10 plus points of fast falling. The IWM small caps, they need to rally 4% to get back to the problem areas of 223 to 225. They need another 4 to 5% on top of it to get to 231 for them to take control again over the bears. So the IWM is essentially in a sell the rally mode comfortably in the hands of the bears. In summary, we had a second weekly red tick in the markets in spite of a really strong finish. My advice to the bulls would be to get more humble, please, and the bears to stay humble still. Look out for the follow-through or the lack thereof to answer the same questions from earlier. Did they break trend? And can this be the first bull trap in more than a year?